All right, ready to dive in. Today, we're tackling How to Make Money in Stocks by William O'Neill.
A classic for a reason.
You bet. And you know what? You sent over this awesome YouTube summary,
Mm.
and we're going to use that to pull out the most valuable insights so
Yeah.
you can make smart investment decisions, right?
Right.
Ever feel like you're playing catch up in the stock market?
Oh, yeah.
Well, O'Neill's work, I think this might just give you the edge you've been looking for.
What I find fascinating about O'Neill is his data-driven approach.
Yeah.
He spent years studying market trends and those characteristics of winning stocks.
Right.
And he developed a system that's insightful and practical.
Okay, so let's unpack this system. It's called CAN SLIM, right?
That's it.
So what makes this acronym more than just a catchy phrase?
Well, each letter represents a key factor that O'Neill identified in successful stocks.
Okay.
We can start with C, current quarterly earnings and sales.
Okay.
O'Neill found that companies exhibiting that strong, accelerating earnings growth, they were much more likely to outperform the market.
Like, how much are we talking here?
Think a 70% increase in earnings per share
Wow.
compared to the same quarter the previous year.
70%.
70%.
That's impressive, but what about consistency?
Right.
A single quarter could be a fluke.
Exactly. And that's where A comes in.
Mm.
Annual earnings increases.
Okay.
O'Neill recommends at least 25%
Mm.
annual earnings growth
Okay.
over the past 3 years,
But it's
consistently.
not consistent.
This helps weed out those one-hit wonders
All right.
and focus on companies with that sustained upward momentum.
So we're looking for a company that's not just performing well right now,
Right.
but has been steadily growing for a while.
Yes.
But how do we account for those companies that just kind of explode onto the scene?
Right.
With like a disruptive product or a new strategy?
Yeah.
New products, management, or conditions.
Okay.
O'Neill found that a staggering 95% of the top performing stocks over the last century introduced something new. Okay.
Whether it was a game-changing product,
Okay.
a dynamic CEO,
Mm-hmm.
or a shift in that industry landscape.
So innovation is key, right?
Yes.
It's not just about numbers on a balance sheet.
Right.
It's about understanding the company's story.
Yes.
And looking for those catalysts for growth. Okay.
Alright.
S, supply and demand.
Okay.
This feels like Econ 101.
It is.
But how does it apply to stock selection?
Okay, so O'Neill highlights 2 key points here.
Right.
First, look for companies that are actively buying back their own stock.
Oh, okay.
This reduces the number of shares available,
Okay.
which can increase demand
Mm-hmm.
and drive up the price.
Interesting. So it's like creating artificial scarcity.
Exactly.
Okay.
Second, pay attention to how much stock the company's management owns.
Oh, okay.
When management has skin in the game, their interests are aligned with yours,
Yeah.
and they're more likely to make decisions
Yeah.
that benefit shareholders.
So we're looking for companies where management is putting their money where their mouth is.
Absolutely.
Makes sense. Okay. L, leader or laggard.
Okay.
I have a feeling I know which one we're going to go for.
You're catching on.
Okay.
It's not enough to just pick a company in a hot industry.
Right.
O'Neill's research shows that the real winners are the companies leading those industries,
Okay.
the ones with the strongest earnings growth
Mhm.
and the most innovative offerings.
So we're aiming for the top dogs.
Hot dogs.
The ones that are setting the pace.
Absolutely.
Makes sense. All right. Institutional sponsorship.
Okay.
Can you explain why these big institutional investors are so important?
Think of them as the whales of the market.
Okay.
Their buying and selling decisions can have a huge impact on stock prices.
Hmm.
O'Neill recommends looking for companies that are attracting, a
Okay.
growing number of these institutional investors,
Okay.
particularly the ones with a track record
Mm-hmm.
of making smart investments.
It's like a vote of confidence
It is.
from the pros.
Yes.
But how can I, as an individual investor,
Right.
figure out which institutional investors are worth following?
That's a great question.
Are there any like red flags or indicators?
One approach is to look for institutions with a long-term focus
Okay.
and a history of investing in companies with strong fundamentals.
Right.
You can actually find information about their holdings
Oh, okay.
in a company's quarterly filings,
Okay.
which are public.
Gotcha. So I can do some digging.
You can.
Okay, but even with the perfect stock pick, timing is everything, right?
Absolutely.
That's where M comes in.
Market direction.
Market direction, we can't ignore the bigger picture.
We can.
Even if you found a company that fits all the can slim criteria perfectly,
Right.
a bearish market can still drag your investment down.
Absolutely.
O'Neill stresses the importance of understanding
Yes.
the overall market trend
Mm-hmm.
and using tools like major market indices,
Right.
like the S&P Global 1200 or
Mhm.
the NASDAQ composite.
Those are good ones.
Okay, so we need to figure out if the market is in a bullish or bearish phase
Yes.
before we even think about individual stocks.
It's like building a foundation
It is.
before you
Ew.
construct the house.
That's a great analogy.
Thank you.
Okay, so we've decoded Can Slim.
We have.
It's a lot to process, but I feel like we're just getting started.
We are.
So how about we dive into those market signals?
Let's do it.
What are some ways we can determine if the market's bullish or bearish?
Okay, so O'Neill provides some really interesting insights
Okay.
into how stocks behave
Okay.
in different market environments.
Right.
For example, he observed that in a bear market,
Mm-hmm.
stocks often open strong but close weak. The opposite is true in a bull market.
So it's not just about the overall direction. It's about those subtle clues
It is.
in the daily price movements.
Yeah.
That's fascinating.
He also talks about distribution days,
Okay.
which are days when a major market index experiences increased trading volume but flat or negative price movement.
Okay.
4 or 5 of these within a few weeks could be a sign that a bull market is ending.
That's a red flag.
It is.
Okay, so what about signs that a bear market's ending?
Right?
Is there anything that signals a turnaround?
Yes, follow-through days.
Okay.
This is when, after a period of decline,
Okay.
an index has a day with a significant price increase and higher volume than the previous days.
So we're looking for that combination of price and volume.
You got it.
Okay, a sign that the market's gaining some real momentum.
Yes.
Okay, are there any other indicators O'Neill uses to gauge market direction?
He observed something pretty counterintuitive.
What's that?
Market shifts often occur when the news is the most negative.
Really?
Think about it. When everyone is panicking,
Yeah.
that's often when the best buying opportunities emerge.
It's like that saying, buy when there's blood in the streets.
Exactly.
Even if it's figurative blood. It's about recognizing that fear can create opportunity
Right.
for those who are willing to be contrarian, right? But how do we avoid letting our own emotions get in the way?
That is the question.
Right. Fear and greed are powerful forces.
Yeah.
Easy to get swept up in the hype.
It is. He suggests a simple trick.
Ah, okay.
Analyze your own recent stock purchases.
Okay.
If you're consistently making money, it's likely a bull market.
Okay.
If you're not seeing any gains, it might be time to be more cautious.
That's a really practical way to gauge the market.
It is.
It's about grounding ourselves in reality.
Yes.
And not just relying on our hopes or fears.
Right.
Okay, so we've talked about Can Slim, some of the ways to read market signals, right? But let's move on to something that feels even more tangible, stock charts.
Okay, so this is where O'Neill introduces the idea of stock charts
Okay.
as essential tools for investors.
Right.
He compares them to EKGs for doctors or weather models for scientists.
Interesting.
They help us visualize a stock's price and volume history
Okay.
and reveal patterns that can signal
Okay.
potential buy-or-sell opportunities.
So we're not just staring at numbers on a spreadsheet.
Right.
We're learning to read the language of charts.
You got it.
But with so many different chart patterns, where do we even begin?
Well, O'Neill is particularly fond of the cup with handle pattern,
Okay.
which he found to be a reliable indicator
Okay.
of future price increases.
And you said it literally looks like a cup with a handle.
It does. The cup part is formed by a period of decline,
Okay.
followed by a recovery, creating that rounded bottom.
So it's like the stock is taking a breather,
Yes,
consolidating before its next move upward.
exactly.
What about the handle?
The handle is a shorter,
Okay.
shallower decline.
Okay.
That forms on the right side of the cup,
Hmm.
right before a potential breakout.
Okay.
So it's like shaking out
Right.
any weak holders before making its big move.
Okay.
He found that these patterns typically form over 7 to 65 weeks.
Wow. That's a wide range.
It is,
Okay.
with the decline during the cup part
Okay.
being between 12 and 30% from the previous high.
Those are some very specific parameters.
They are.
Sounds like he's really done his research.
He did.
But is the cup with handle the only pattern we should be looking for?
Not at all.
Okay.
He also mentions other strong base patterns,
Okay.
like the cup without handle,
Okay.
double bottom, and the flat base.
Okay.
Each has its own unique characteristics.
Okay.
But they all suggest that a stock is building strength
Gotcha.
for a potential upward move.
Okay, so we're expanding our visual vocabulary for reading stock charts.
Yes,
This is fascinating.
it is.
But even if we spot a perfect cup with handle pattern,
Right.
how do we know when to buy?
That's where the pivot point comes in.
Okay.
It's the point at which the stock breaks above the handle on increasing volume.
So we're looking for that surge in both price and volume.
Exactly.
Confirming that buyers are back in control.
Yes.
That makes sense, but I think it's time to talk about something
Okay.
that might be even more important than knowing when to buy, knowing when to sell,
Okay.
and especially when to cut our losses.
You're absolutely right.
Right.
Yes.
And that's where O'Neill's disciplined approach to risk management really shines.
Okay. He is a firm believer
Okay.
in cutting losses short, using a strict 7-8% stop loss rule.
7-8%, that seems pretty strict.
It is.
Why such a tight leash?
Because the bigger the loss,
Yeah.
the harder it is to recover.
Mm.
He famously said,
Okay.
the secret to winning big in the stock market
Okay.
is not to be right all the time,
Okay.
but to lose the least amount of money possible when you're wrong.
That's a powerful statement.
It is.
It's not about avoiding losses altogether.
Right.
It's about minimizing the damage when they inevitably happen.
Absolutely.
But what about the fear of missing out, right?
Oh, yeah.
What if we sell too soon?
That's right.
And the stock rebounds.
That's where the math comes in.
Okay.
Let's say you buy a stock at $100.
Okay.
If it drops 7%, you're down $7
Right.
to get back to even.
Okay.
It only needs to rise 7.5%.
Okay.
But if you let it drop 20%,
Yeah.
now you're down $20.
Okay.
And that stock needs to climb over 25% just to get back to your original investment.
So the bigger the loss, the steeper the climb back to profitability.
You got it.
So cutting losses short isn't about being pessimistic.
Right.
It's about protecting our capital
Yes.
and giving ourselves the best chance to win in the long run.
Absolutely.
It's like knowing when to fold in poker.
It is.
Sometimes the best move is to walk away
Yeah.
and live to play another hand.
Yes.
Okay, we've covered a lot of ground here.
We have.
We've decoded CanSlim, learned how to read market signals, and even tackled the tough topic of cutting losses.
Right.
But before we move on to selling strategies, I think it's helpful to revisit the idea of buying stocks from a strong base.
Absolutely. It's not just about finding a company
Right.
that checks all the CanSlim boxes.
Right.
We also want to make sure we're buying at the right time.
Yeah.
Ideally, when a stock is showing signs of strength and poised for a potential upward move.
Let's talk about those strong base patterns.
Okay.
Okay, so those strong base patterns you mentioned earlier.
Yes.
You said O'Neill's a fan of the cup with handle.
He is.
Can you walk us through why he sees this as such a reliable indicator?
So imagine a stock's price chart,
Okay.
and it literally looks like a cup with a handle.
Okay.
The cup part is formed by a period of decline, followed by a recovery,
Right.
creating that rounded bottom.
Okay.
Then the handle forms as a shorter, shallower decline on the right side of the cup.
Oh.
O'Neill saw this pattern repeatedly
Okay.
in stocks that went on to make significant gains.
So it's like the stock is catching its breath,
Yes,
shaking out weak holders before it takes off.
exactly. It's a sign of consolidation
Okay.
and potential accumulation. The key here is to wait for the breakout.
Okay.
The moment the stock price breaks above the handle
Okay.
on increasing volume.
Okay. So volume is that confirmation
Confirmation.
that buyers are back in control.
Absolutely.
Got it. But you mentioned other base patterns too.
Yes.
Like the double bottom.
Yeah, so that one looks like a W shape.
Oh.
And,
yeah.
and it indicates a period of consolidation and potential accumulation.
Okay.
They show that buyers are stepping in
Okay.
at certain price levels,
Okay.
creating that support, and potentially setting the stage for a rally.
So we're looking for patterns that suggest a shift in momentum.
Yes.
From selling pressure to buying pressure.
Precisely. And these patterns aren't just random shapes on a chart.
Right.
They reflect that underlying psychology of the market, the
Right.
battle between the buyers and sellers.
Okay, so we've got CanSlim for stock selection, market signals for understanding the broader context,
Yes.
and now base patterns for timing our entry.
We do.
This feels like a pretty solid toolkit for buying stocks.
It is.
But we can't forget the other side of the equation.
I know.
Knowing when to sell.
Oh,
As much as we might wish it, stocks don't go up forever.
they don't.
And even with